Right now, so many families are struggling to make ends meet, and some can't even scrape together a few $100. It's hard to believe, right? Some people are like, no way, it can't be that bad, can it? But let me tell you, this is the harsh reality for many out there. They just can't come up with the cash.
The woman who shot this video works in a loan industry. She revealed that she recently received a call from a client she has known for many years. This client told her about his current living situation. His housing loan and credit card payments are overdue. Just the mortgage alone costs more than 5,000 yuan each month, and with other expenses. He's the sole breadwinner for the whole family. The woman said the client cried throughout the call, asking her for advice. Every time his phone rings, regardless of who calls, he instinctively believes it's someone asking for money, feeling constantly on edge. He mentioned that he couldn't even produce a few hundred yuan and was at a loss. Can you imagine a grown-up spending over half an hour crying on the phone? She revealed that this scene is probably unfolding in many families in Guangzhou. Earning 8,000 yuan a month in Guangzhou is considered average, but relying on a single income for an entire family is very challenging. Monthly expenses not only include household needs but also various loans. Many people have numerous small loans in the hundreds and thousands, such as from platforms like Huabei and Meituan. She emphasized that these situations are real and not exaggerated. She further stated that this year, according to data released by the central bank, 700 to 800 million people are in debt, with about 300 million facing the inability to repay loans, and this number continues to rise. She personally feels this in the loan industry. Most debtors live in distress, constantly harassed by collection calls, with some even facing harassment directed at their friends and family. However, she believes most people don't avoid repayment intentionally, but are suffocated by unreasonable interest rates. They need more time to earn and repay rather than being pushed into corners.
我们每个月要花5000块钱的房贷，像我们这种工薪阶层的话，一个月呢只能赚4000多块钱，然后还有小孩。如果说这个烂尾楼一直要烂着的话，那我们对于我个人来说的话，真的没有活下去的勇气。
In the video, the lady saved up and even borrowed from friends and family to make a down payment for a house. Tragically, she bought a property that was never completed, not only depriving her of a home, but also resulting in a significant financial loss. The bank's loan payments did not cease, making her lose hope in life and cry profusely. Under the Chinese Communist Party's 3-year strict zero-COVID policy, many foreign enterprises closed their factories and left China. Numerous local SMEs also went bankrupt, leading to soaring unemployment rates, forcing many to default on their mortgages. Data shows that from January to June this year, the number of houses auctioned off by courts across China reached around 240,000, a 19.8% year-on-year increase, with residential listings accounting for 145,200. These numbers highlight the financial pressure faced by the Chinese populace, with major cities like Shanghai, Shenzhen, and Guangzhou being heavily affected.
By the way, any of you know how the job market is in Shanghai this year? A friend of mine got laid off during her honeymoon, and a few months later, her husband lost his job too. Now they're both out of work and can't make their mortgage payments.
A resident of Shanghai shared her friend's story. After getting married this year, with the help of both their parents, the friend made a down payment for a house in Shanghai with a monthly mortgage of 10,000 yuan. They went on a honeymoon, only to find upon return that the wife's company had gone bankrupt. After months of job searching without success, misfortune struck again, and the husband lost his job. They have to pay rent every month on top of their mortgage for the apartment that is under construction, and spend extra on renovations because it had subpar decor. The resident emphasized the unstable job market in Shanghai and dropping housing prices, advising against buying houses currently.
Let me share a real story from Shenzhen with you guys. It's a real heartbreaker. Imagine this, a regular salaried worker in Shenzhen, pulling in 60,000 a month, and yet step by step they find themselves on the brink of bankruptcy. Crazy, right?
Another man detailed how his friend, once a high-earning individual, gradually fell into the real estate debt trap and is now on the brink of bankruptcy. His friend joined Tencent as a programmer in 2012, and despite the frequent overtime, earned a substantial income. By 2015, the friend bought his first apartment and car on loan. He married the same year, and his wife, a company accountant, later became a full-time homemaker. By 2017, property prices in Shenzhen surged. Selling his first apartment, they bought a larger one for over 16 million yuan, banking on the rise in property value to manage the hefty 60,000 yuan monthly payment. In 2020, housing prices experienced another surge, with the value of his property in Nanshan nearly doubling. This greatly boosted his confidence, giving him the impression that making money through real estate was incredibly easy. Consequently, he decided to engage in property speculation. He mortgaged his Nanshan property with a financial company, utilized both his credit cards and loans, and purchased another property in Xili for over 10 million yuan. However, this boom was short-lived. In 2021, Shenzhen introduced guidelines for second-hand housing prices, leading to a decline in property values. As of this year, the value of his Nanshan property has fallen below the bank's credit limit, posing the risk of a loan recall. Moreover, the Xili property he acquired became embroiled in a dispute with the developer, and a batch of houses were auctioned off by the court at prices lower than their original purchase price. Seemingly overnight, his properties remained valuable only on paper. With monthly household expenses and mortgages totaling 100,000 yuan, he quickly felt the financial strain. He subsequently listed his Nanshan property for sale, but it remained unsold after 3 months. In May of this year, he received a layoff notice from his company, plunging him into an unprecedented crisis. Online loans and credit debts were overdue, and those who previously lent him money began to press for repayment. To add insult to injury, he was soon served with a lawsuit notice from the court. Undoubtedly, he was teetering on the brink of bankruptcy.
Manufacturing is super tough this year. I popped into the warehouse today and it's packed with stock, from front to back. Stuff just isn't moving, you know? I wonder how many other manufacturing bosses are in the same boat as me. No new orders, regular customers cutting back, and competitors breathing down our necks.
Many business owners in China are facing financial difficulties due to a loss of foreign orders. As revealed by an SME owner, this year saw a downturn in China's manufacturing sector, with a sudden absence of foreign clients. Domestic sales, which previously served as a fallback in the absence of foreign orders, were also severely impacted by intensified competition. This business owner continued, stating that many companies have gone bankrupt this year, with some unable to pay salaries. Job opportunities for the unemployed were scarce. While there was hope that the economy would recover 3 years post-pandemic, the challenges following the pandemic have made even surviving this year questionable. It's believed that many businesses like his are on the verge of collapse and are merely hanging on by a thread.
I tried starting a business and tanked it. From startup to shut down, it took only 3 months. I lost my bestie and blew through 7 years of savings. I checked all the tickets home, and even the cheapest one was too much for me. That night, all I could think about was whether I should call my folks. After a lot of back and forth, I decided to sell my computer, which was like selling my dreams. The station plaza was all lit up, but I felt so lost in the dark. I used to get so pumped about going home that I couldn't sleep, just wanting to see my parents. But that night, I wished time would just stop. I missed home but was scared to go back. The whole way, I kept thinking about how I'd explain my business flop to them. I didn't want to tell them. But the moment I saw my mom, I just broke down.
On July 5th, the Weibo account Stock Market Ren Ying Ying posted that currently 780 million people in the nation are in debt, with 420 million facing overdue payments. Just the overdue amount on credit cards exceeds 200 billion yuan, with the total national debt approaching nearly 300 trillion yuan, averaging 200,000 to 300,000 yuan per person. Furthermore, 560 million people still have no savings, emphasizing that these statistics are neither alarmist nor exaggerated, but genuinely credible. China, the world's largest consumer country, is sinking into an unprecedented economic downturn. It's widely believed that the lackluster domestic consumption in China means less production. Coupled with the rising unemployment rate, a high scale of household debt, and diminished purchasing power, the economy is in a vicious cycle. Amidst this economic downturn, the real estate market in China remains depressed. Major real estate companies, including Evergrande and Country Garden, are continuously hit by default storms, intensifying the occurrence of unfinished apartments and the loss of market confidence. Chinese newspaper The Economic Observer quoted a research report by Bainian Construction Network, a third-party platform for the construction industry. Out of over 1,100 projects nationwide surveyed, as of the end of May this year, the delivery progress in South China and North China was 56% and 40% respectively. In contrast, the Southwest and Central China regions only achieved 15 and 16%. Akio Yaita, a seasoned Japanese media personality, wrote about his observations of Country Garden, noting that the company's primary mode of profit was leveraging political business relations to access lands and loans unavailable to others. The company's operation is family-centric, leading him to conclude that this company might not go very far. At the same time, Xu Jiayin, the owner of Evergrande, who came from humble beginnings, managed to boost the company's success through building connections with the powerful. Yaita said, "It's truly tragic for those who have spent all their savings, including their parents, on buying houses but are still waiting for delivery. Living under the rule of the Communist Party, billions of people are being harvested like leeks and have nowhere to run. Their lives represent the real tragedies." To stimulate economic growth, the CCP has issued a massive amount of RMB. By the end of April 2023, the broad money supply M2 balance was 280.9 trillion yuan, a 12.4% increase from the 250 trillion yuan in April 2022. This means that in 12 months, the total amount of RMB increased by about 31 trillion yuan. Yet there's no corresponding rise in production and consumption. Where has all this printed money gone, and why hasn't it had the expected effect? Professor Frank Xietian, Associate Professor of Marketing and John M. Olin Palmetto Chair in Business at the University of South Carolina, Aiken, believes that the money has ended up in the hands of corrupt CCP officials and elites. Professor Xie said, "The CCP has been continuously loosening monetary policy and printing money. The newly issued money mainly enters state-owned enterprises, financing platforms controlled by CCP elites, and a small number of private enterprises. A significant portion of the cash is held by corrupt officials, the second red generation, and other elites, without being reinvested. They are now not even daring to spend ostentatiously. Elites and corrupt officials don't need to buy houses. They want to get their money out of the country. Some businessmen with close ties to high-ranking CCP officials earn money in the foreground, while officials in the background provide substantial assistance, acting as shadow shareholders. In essence, these businessmen serve as the officials' agents, commonly referred to as white gloves, responsible for laundering their dirty money. These white gloves can be found in various sectors, including construction contracting, government procurement, and finance. What the CCP calls state-owned enterprises, or SOE, are different from regular enterprises. SOEs are considered the beloved sons of the CCP regime, essentially national assets directly controlled by CCP elites. Before 2018, the proportion of state-owned enterprises was 56%. Recently, with the CCP's push for a new version of public-private partnership, some private enterprises' assets have been absorbed by state-owned entities. Currently, SOEs account for more than 60% of the total assets of all enterprises in the country. According to statistics from the CCP's Ministry of Finance, the debt-to-asset ratio of SOEs is 64.4%. That of central enterprises is 67.1%, and local SOEs have a ratio of 63.1%. The CCP prioritizes loans to central and large SOEs to ensure their survival. Private enterprises, on the other hand, have difficulty securing loans. Professor Xie also mentioned CCP elites and corrupt officials can easily secure loans for various spending, but we don't know what they spend it on. Money goes into their pockets, and even if their investments fail, they are not held accountable. In the past, Xi Jinping wanted to develop semiconductor technology, attracting a surge of companies. However, most went bankrupt later. Now, a new batch is focusing on AI. Some individuals are eyeing the newly printed money, looking for ways to secure it. In short, it's easy for elite families and their members to get their hands on this money.